Welcome everyone and Happy New Year. I am delighted to start the new year with the one and only Rick Rule. Sir, thank you for being here again.
Peter, thank you for having me back. It's a pleasure to be with you.
Oh, it is my pleasure. Um, so I have three main topics for today, and maybe if we have some time, then a few questions after that. The first one is about the last 2 months, November, December, during which you visited multiple conferences. I also spent a good part of November away from home. We met in New Orleans. You also went to Zurich. Me too. And so, what is your feeling after these conferences? Are we still not peaking the gold cycle? What surprised you? What are the take-home messages? Or would you like to leave everything behind and just start an air conditioning business in India, maybe?
I'll pass on the latter. I know a lot about mining and nothing about air conditioning, so I'll stick to
Yeah,
what I know.
I meant the
Uh,
copper or the metal part.
now there's an interesting topic. I believe that we're in a precious metals bull market as we
Hmm.
speak.
Yeah,
I
good.
believe that we have an industrial materials market, including copper, coming in the future, copper and oil. I don't think it's here now. Yes, copper has done fairly well, but copper hasn't done as well as one would expect, given the fact that almost 7% of world copper supplies are currently shut down. Things like Cobre Panama, Kakula, the problems at Ertsberg and Grasberg. One would have suspected a market that was already experiencing tight shortages to have much more price response to the production difficulties that we've had on a global basis. That points to me to global economic weakness. And I suspect that the world economies are going to need a couple of years to get through that. When they get through it, and we will get through it, I think you're going to see real fireworks in industrial materials, oil, gas, copper, nickel, the whole range. But you're going to need 2 or 3 years to get through it. You are in a gold bull market right now. Now, uh, to your original question, which had to do with the conferences and settlement, I think it's important to know that if you're at a gold conference, probably you're going to meet people who are pretty bullish gold. No mistake. It's like going into an evangelical church in the U.S. South and asking the choir if they believe in God. The answer is likely yes. What interests me about the gold trade is the fact that the generalist investor is just starting to come into the space. While gold is front and center for you and I, Wall Street is just beginning to discover it. In fact, what you're seeing with the big Wall Street houses is that their strategists are saying that gold is the place to be. And they have 5,000 targets and 6,000 targets. But their metals analysts, when they're doing earnings forecasts, are using 3,000 or 3,200 in a $4,200 world. This doesn't show a lot of conviction, A, and it makes not generating earnings surprises very difficult. It's not too hard to beat projections when the projecting selling price of your product is 3,200 and you're selling it for 4,200.
Yeah.
One other observation from 6 conferences in 5 weeks is that there really truly is a new set of investors in the gold space. For years, the investment audience looked like me: old, fat, bald, male, white. That's changing. There are lots of young people in the trade, mostly non-Caucasian, an increasing number non-male,
Yeah.
and very bright people for the most part. Emotional, sure, gold is an emotional trade. But I met a lot of people, but particularly young Europeans, who I think own gold for the right reasons, which is to say, the arithmetic behind the investment outlook for savings products denominated in euros or US dollars, which is to say, young, smart investors who own gold for the right reasons, something that was missing in the decade of the 70s. I was around for that move, by the way.
And what was the so if I understand correctly, then also the quality of the people who are entering the field is better than expected. Right?
Surprisingly higher than when
Surprisingly.
I came into business. Yes.
Okay. That's interesting. And other surprises for you, or
Not really.
not really? Yeah.
I mean, I think later in the interview, we're going to get into the
Yeah,
mistakes that
yeah,
people make,
yeah, yeah,
and we can do that. I was discouraged, as I always am, with what I would call some of the lower quality exhibitors at the conferences.
yeah,
Some exhibitors at the conferences were very high quality, and some exhibitors at the conference won't thrive as companies, at least in any gold price scenario, because they don't have any gold and they're unlikely ever to get any. So that's
yeah.
of course problematic.
Yeah, and there are the lifestyle companies also. I met those also.
Correct.
Uh, Indeed, we have to, especially at the conference where there are many, or many, yeah, many dozens of exhibitors, we have to really filter out the bad companies. So it's a lot of work. I'm still practicing, but it's a lot of work. And yeah, great. And I also see that nowadays, and probably your summer conference is also selling better than previous years because we are in the bull cycle, and bull phase and bull market. And we also hear at these conferences that there are, I don't know, 20% more, 25% more people, attendees. And yeah, part of those people will make mistakes, but we will get to that. But thank you. And these are very interesting points. But I would like to ask the viewers, don't skip this part because it is very important also for our last segment, the third one. I am wearing my uranium tie. Maybe it's visible. My funny uranium tie uh, to honor your 2020 summer conference. After which I bought the uranium stocks, and that was the time really to buy, at least in that cycle. And you will have a summer conference this year as well, and just this Saturday, Golden Triangle Bootcamp. I will be there, but for those viewers who don't have a ticket yet, what should they expect? Why should they care? Why is it very important, in your opinion, to attend these events, the boot camp and also the summer conference?
The boot camp and the conference are very different products. So let's deal with the boot camp first.
Yeah, yeah,
Boot camps we hold every 3 months.
yeah.
The topics for the boot camp are selected by the long-term students at the Rural Classroom, which is to say the audience selects the topics. And the boot camps are 8 hour long, very deep dives into one specific topic. We've done, as you point out, uranium, we did silver, we did prospect generators, we did developers, we did the majors, we did gold. This is the first one coming up this weekend where we're going to do a region, an area play. We chose the Golden Triangle in northern BC because obviously a lot of our 15,000 students have invested there and they asked us to do it. But it's a wonderful topic. It is a very prospective, mineral rich part of British Columbia with unique politics, unique geology, unique sociology. And there are a lot of lessons around the Golden Triangle that are applicable elsewhere. And the opportunities vary from Newmont, as an example, the largest gold mining company in the world, all the way down to the penny dreadfuls in exploration. We think that there is a lot of opportunity in the Golden Triangle. We think there's a lot of risk in the Golden Triangle. We think that the Golden Triangle is a place to teach a lot of lessons that are applicable outside the Golden Triangle. In particular, we are attracted to the opportunity to teach about Indigenous and First Nations relationships. The Golden Triangle, in terms of the resident inhabitants, is probably 85 or 90% Indigenous. And I have now almost 40 years of experience with those Indigenous communities. I hold them in very high regards. We're going to have a spectacular human being, Cody Penner, a Tahltan First Nation, uh, who has been active in the mining business for 20 years, but his father was in the mining business before him. So somebody who can talk about Indigenous relationships with an Indigenous perspective, but also a mining perspective. If you don't understand First Nations relationships, you are going to fail in Canada. That's a given. But particularly in the Golden Triangle, you have bands that have 40 or 50 years of experience in mining. And rather than being obstacles, these guys are your biggest allies, your biggest assets. And so we're going to spend an hour exploring indigenous relationships and how they impact your investments and how they impact your speculations. And if you don't understand this, you have no business. Literally, you have no business speculating in Canada in general, but in the Golden Triangle in particular. So I'm extremely excited about this. If you aren't a speculator, if you aren't interested in Northern Canada, Northern BC, of course, there's probably not so many reasons to show up, although it'll be a wonderfully interesting thing. The conference is a different cup of tea. This is more for any resource investor. We've been putting on this conference for about 30 years. I don't know how many years exactly. And it's different than other people's conferences, different in a whole bunch of ways. Different because every exhibitor at the conference has been vetted, which is to say, if I don't own them, they don't come on my conference floor. There's no guarantee that because I own them, the stock goes up, but there is a guarantee that they've been vetted. At most conferences, the qualification to exhibit is a check that cashes, as simple as that. And that leads to a lot of junk exhibitors. We don't have junk exhibitors at our conference. We have some wonderful features too, the living legends. We bring on stage people who have built multi-billion-dollar resource companies from scratch, telling you about how they did it and how the lessons that they learned can make you a better investor. This year, we're focusing on the next legends. We're getting people who are young enough that they have 20 or 25 years of entrepreneurial effort behind them, but they've enjoyed enough success in the immediate past, a couple of successful builds, that they are already acquiring legend status. They are often not well enough known that their names attract the huge premiums that are attracted by the Robert Friedlands or the Bob Quartermains of the world. And so we think that's worthwhile. Also, with our conference, unlike any other conference I know, whether you attend live, which I would prefer, or live stream, joining 1,500 to 2,000 people in 30 other countries, if you don't think for any reason that you got your money's worth, I give you your money back. There's a full money back guarantee. Also, you'll have access to the recordings for a full year, and you're going to need it. Over the 4 days of the conference, we're going to work you 12 hours a day for 4 straight days. I put on the conference, and I have to play the recordings.
Indeed, indeed, that's true. I would not miss it. I will be there this year, and yeah, I like most that I can talk to these companies and
Sure.
the people behind them, and I can really discuss with them my way of thinking. I formulate a thesis of a given company. I can go there and discuss this. And actually, I also went to Rudy last time from Sea Beach Growth, and he will tell me, yes, it's true, but use this number in your calculation because of
Yeah.
that. Absolutely, that all is worth more than the conference price. So yeah, and thank you. So I recommend for everyone, and I would like to stress for the following segment that we are here to learn how Rick is thinking. What is he? How does he think? But the viewers are responsible for their own future well-being. So it is not investment advice. It's just have a look at how Rick is behaving as an investor or a speculator. And we could also discuss the bad mistakes, the people who are here just because the gold price is rising, or they will enter later this year or 2027 in the greed phase, maybe. But the point is that there are many investors who want to be good investors. They are here for the good reasons, but they are just joining the sector now. Because, for example, they are young. I also did not buy Pan American when it was 50 cents or $1. So when around the IPO when you entered, or Ivanhoe Mines at $1, I did not buy because I was not in the space yet. And if we can agree that the market is still in its third or fourth innings, or you tell me where, then there is still some value left. and there is a way to invest wisely. So I would like to discuss this behavior, how to behave in this market when you enter the sector with a good reason now. And I also collected some stock examples, some lessons, some questions. So it's a very broad topic. We don't have enough time for it, of course, but uh, how would you like to start with some lessons, questions through companies? Should we go? Which one would you like?
As you wish, but let me begin
Yeah.
by saying
Okay.
in prior interviews and on my own channel, Rural
Yeah.
Investment Media and the Rural Classroom, I've talked about the reasons why I believe the gold price will continue to rise
Yeah.
from
Yeah.
here.
Yeah. Yeah. Yeah.
The rise might not be as aggressive as the rise that we saw through 2025. You know,
Yeah.
gold was, as we talked about earlier, a coiled spring, and the spring has begun to come unsprung. But I believe, for a bunch of reasons, that savings denominated in fiat currency instruments are going to lose a lot of their purchasing power over the next 10 years. So I think gold will do well. If you believe the gold price is going to go up, the first thing you should do is buy gold. And I believe that physical gold should be in everyone's portfolio, not as a speculation, perhaps, although speculators can trade in it if they wish, but rather as insurance. Own it and perversely hope the price doesn't go up
Yes.
because it's there to protect you against something that's very, very, very pernicious.
Yeah.
Moving to the gold stocks, which is more your beat, you're right. Uh, Incumbent investors and the new investors make a fair number of mistakes that they don't need to make. I have, Peter, as you know, for free, graded tens of thousands of
Yes.
portfolios at Rural Investment Media. I've been able to teach a lot, but I've learned a lot too. I've learned in particular the mistakes that investors make over and over and over and over. The first is that people forget that the first investment they need to make is in themselves, in their own knowledge. Do the work. Uh, there are lots of places to do the work. My favorite place for you to do work, of course, is the Rural Classroom, which has a couple hundred hours of instructional programming, and it's free, the best possible price. That includes, when I'm in town uh, on Thursdays, question and answer periods where I answer questions about any topic, but including the stocks, for free. We have an upcoming special segment on mastering the art of selling. Many people are okay on the buy side, but they forget to sell. You haven't made the money till you take the money. But let's go back to the mistakes. The first mistake, after not preparing yourself, is the fact that many people's strategies and their tactics vary. Somebody's strategy might be that the gold price is going to go up for 5 years, or the copper price is going to go up in 5 years, or the oil price is going to go up in 5 years. But their holding period for their stocks is over a long weekend. Uh, if you don't take the time for your thesis to bear out, you are like as not to snatch defeat from the jaws of victory, which is to say, you have the big picture right, but your trading technique prevented you from making any money. The second thing is that people don't use common sense. Many, many, many times, Peter, I've called people when their portfolios interested me to get to know more about their decision-making process. And I'll ask them about a certain stock. What do you like about this one? They say, well, I don't know anything about it. Well, if you don't know anything about it, why do you own it? Well, I own it because Bob Bishop recommended it. Come on, Bob Bishop had retired for 16 years. You still own it? Well, I can't sell it. Why can't you sell it? Well, if I sell it, I lose $3.60. You see, I bought it at $4 and it's now at 40 cents. And I have to say, no, sir. The truth is you've already lost the 360. The question is, what do you do with the 40? If you own it, any day that you own a stock where there's a bid, it's the same as if you bought it. You have a choice every day between having the money and having the stock. So if you don't sell it, you just rebought it. If you like it and it went from $4 to 40 cents, one could argue that it's 10 times as good a buy at a tenth the price. You follow where I'm going with this? When I buy a stock, Peter, and I would urge all of your listeners to do this, I write myself a 1 or 2 page memo about why I bought it, what I'm expecting to get out of it, what are the risks, what will cause me to sell it, I write my thesis and I visit that thesis every 90 days. If during the period of time I hold a stock, they aren't living up to my expectations. I don't mean my price expectations. I mean the news flow. I sell the stock. If it looks like the news with regards to the answering of some unanswered question is bad, I sell the stock. If my reason to own the stock goes away, the stock goes away too. If I've accomplished my goals, both in terms of need and price, I sell at least enough of the stock to recoup all of my original capital. But the truth is, by having a thesis around owning a stock, you become a much, much, much better investor. People need to do that. And of course, another thing, at least with regards to the junior stocks, is that while they're building the company, it isn't so much about the resources, it is about the people. You have to hang out with extremely high quality people. There's a social science dictum called Pareto's Law. That's the label, if you will, for the 80-20 principle, which suggests that 20% of a population generates 80% of the positive utility in a sector. And that's true. Less well known is that there's a different 20% of the population that generates 80% of the aggravation. So your first challenge is to hang out with the good 20 and avoid the bad 20. But it goes deeper. If you put that good 20, the outperforming lip, through the same performance dispersal curve, it conformably aligns again, which is a fancy way of saying that 20% of the 20 or 4% of the population generates 80% of the 80 or 64% of the utility. Hang out with the best people. Hang out with the serial achievers. Hang out with the Robert Friedlands, the Ross Beatties, the Bob Quartermains. Yes, you're going to miss a couple high-flying young superstars. You're going to miss the odd stock that goes from a nickel to a dollar. But you're going to miss most of the ones that go from 60 cents to zero, too. That's a really, really, really good trade. The third thing is be a contrarian. You mentioned earlier in this episode the uranium trade in the year 2020. There's nothing in the world that rewards speculators as much as hate. If you find a sector that's roundly hated, you don't have much competition buying the sector. The easiest money in speculation is the demise of hate. Buy the hate trade, and hold the assets until maybe they're not loved, but at least they are no longer hated. For whatever reason, people seem to require price affirmation of their thesis before they buy the thesis, which is to say they understood uranium, but they didn't want to buy it when nobody else bought it because they didn't like it. All of a sudden, the uranium stocks are up fourfold, and the thesis has been validated by the share price. The problem is, by the time the thesis has been validated, the stocks are up so much that all the reward is out of the thesis. Buy hate. Absolutely, positively buy hate. And the last thing is time frame. The great investment performers of the world have all been people that compounded. Warren Buffett said he made most of his money not by thinking, but rather by sitting. He suggested that he favored investments that required of him, quote, sloth and lethargy. As I age, I come to understand the wisdom of that because I have a lot of sloth and lethargy to offer. But also buy investments where time is on your side and allow time to work its course. I was on BNN this morning, and I had a real smile when they asked me about Ivanhoe Mines, and they were talking about whether or not the $16 price was justified. And the consequence of that discussion was I remember buying it when that stock in Congo were roundly hated and paying 63 cents for it. It was partially buying hate and partially the passage of time that allowed me to smile about a 63-cent stock now trading at $16. The truth is, Peter, I've been lucky enough in 50 years in the business to have a lot of 10-baggers. I've had failures too, don't get me wrong, but a lot of 10-baggers, stocks that went up 1,000-fold. And there's a couple things that I want to share about that. Most of my 10-baggers, the overwhelming majority of them, have taken 5 years or so to occur. Make time on your side. The second thing, and this is more profound with regards to my speculative 10-baggers, is that almost all of them have forced me to accept a 50% share price decline while I held them. So, in addition to being patient, you have to be tenacious. And it's precisely that memo that you write yourself about why you bought the stock. It's precisely that knowledge of the stock that gives you the tenacity to weather a 50% share price decline and buy more as opposed to selling it, that allows you to prosper from these 10 baggers.
I think you summarized it well. Maybe if I think we can go to the question parts, but maybe I can add to it that maintain some liquidity, because probably the gold price will go higher, or the silver price. I think it will go higher, but not in a straight line, not like in the last few weeks. And so if there is a market crisis, or then you can take advantage of the opportunities instead of being taken advantage of, as I also learned from you. And so there is if you mentioned Ivanhoe Mines, for example, it is struggling for beginners, that should I buy it now because I know the thesis and if I have 5 years, or I should wait for such an event like we had last year, this seismic event, and then I can buy it for $8-9 or so, below 10. So what do you think about that? Or do you think when we still make the money between the value and price, and then if I think it is cheap, I should start buying it, and if it will be extremely cheap later, then I can just buy more of it?
I would turn the question around and say people that are building resource portfolios need to invest before they speculate. I still regard Ivanhoe as a speculation. So to the extent that, as an example, you like the copper thesis, I might begin by assembling a portfolio of higher quality copper names. Then the question really comes down to you. Once you have the basis covered in copper, then you can focus on Ivanhoe. You can focus on resource growth. You can focus on political instability. You can focus on the seismic events in Congo and when we know the cause for them. Invest before you speculate. And going back to your former point, absolutely positively maintain liquidity for just the reason you said. Having liquidity will give you the tools and hopefully the courage to take advantage of precipitous market declines, which, mark my words, we will have.
Probably.
Will have. I think I said to you, the single finest investment year of my career was 2009, after the 2008 collapse. I had the cash and I had the knowledge to employ the cash. And that was a truly miraculous year, even more miraculous than 2025, which was a pretty miraculous year for me.
This market is so fast. I did not expect that. It was a surprise to me, and also how that we did not have a meaningful correction, I think.
Well, it will.
That was a surprise to me.
It will.
It will. And also I see it on my followers who, there was a correction, I don't know, after the summer, in the fall, but and my followers were really not angry. They were afraid, and I had to calm them down with good psychology lessons, and it worked. But yeah, it's just that we are still beginners. We need to see this couple of cycles. And my next question is also this, that last year there was this example of yours, Agnico Eagle, which the market capitalization doubled, but the share price was arithmetically cheaper than before. So we can still buy it. I mean, it is cheaper. But what additional risks should we accept? What additional behavior should we accept if we do
You have
so?
gold. You have gold price risk now.
Yeah.
The fact that I think the gold price is going to go up does not mean the gold price is going to go up.
Or
uh,
immediately. Yeah.
Buying Agnico Eagle at $2,000, it was much more certain to me that gold was going to go from 2,000 to 4,000 than it is that gold will go from 4,000 to 8,000. If you believe that the gold price holds at 4,000 and goes higher, which I do, then Agnico Eagle, uh, the share price of Agnico Eagle relative to the net present value of its free cash flow at $4,000 gold is cheaper than the stock was at half the price with gold at half the price.
Yeah.
Uh, I believe, as we've discussed on in these interviews before, that the gold price, in a nominal sense, which is to say U.S. dollar sense, goes materially higher over 10 years. I don't know about over 1 year or over 2 years, but over 10 years. And if that's true, it's difficult for me to understand why somebody wouldn't own uh, the best performing major gold mining company in the world. I don't mean the best performing stock. I don't mean share price. I mean return on capital employed, capital deployments, the pipeline of development projects, the increases in production, the all-in sustaining costs, the very, very, very low lost time injury rates in their existing mines, which is evidence of a well-run company, their employee retention, which lowers their labor costs and is also an example of a well-run company. It's very difficult for somebody who would agree with my take on the gold price not to own Agnico Eagle.
Yeah. Yeah. Okay. And thank you. Thank you for that. And I share another example. In my opinion, Hot Chili is a company that in the past few years, the low point was something like 50 million, the market
Yep.
capitalization. And then it doubled to 100 million. And then I shared with my followers that, yeah, of course, it would be nice to have a time machine. But if you buy at 100 million market cap, then it is as cheap as it was before because also the net asset value doubled. The copper price went higher, the gold price went up. Even if you just think about how much gold they will also extract next to copper, just because the gold price was at that time for $4,100, they will make extra 85 million revenue per year just because the gold price went higher, if it stays there. So it is undervalued, in my opinion, but you should buy with the expectation that in 5 years or when all the work they do comes to fruition, it will be fine. But I don't know the share price in the next 1 year. Maybe it will go again to 50 million, or it will come down but by 50%. At that time, you should think like, okay, what is the real value behind it? And then I should buy more. So if you can accept that, then you can also buy at this doubled price. Would you agree
I
with this?
Not too long ago I reread my purchase memo
Okay, okay.
on Hot Chile.
Yeah,
First of all, it's a play on a
it's a
very
long.
bright young geologist businessman, Christian Easterday, who I hold in very high regard. But it is as fine a leverage play on copper as there is. If you think about the copper on the balance sheet relative to the enterprise value, it's very cheap. It's cheap because it's capital intensive, and the market's
Mhm.
expressing skepticism about the company's ability to raise the capital. It also, at a lower copper price, had too much capital intensity, which is to say the net present value of the project and the upfront capex didn't exhibit sufficient leverage. The copper price, if it holds, has fixed that. It is also, in my mind, a company that absolutely, positively, without a doubt, will benefit from increased exploration activities. They're consolidating a district which has been underexplored, and they have been spectacularly successful. There are two wild cards in hot Chile if this copper price holds. The first is they need a high-grade starter pit, which is shallow enough that they could recoup some of the front-end capital investment within the first 2 years. They have indications of a higher grade starter pit, but they need to flesh that out. The second is that they need some advancement in their water activity. They have an exploitation permit for desalination of water. This is a wonderful social tool, being able to promise this water to the community when they're done with it at the end of the mine life. But it's a necessary social license for operating copper mines in a place like the Atacama Desert, which has effectively no water. When we have some certainty as to the progress of the water asset, and when, I should say if we get certainty around a starter pit, this becomes a no-brainer. Until then, it's a leverage play on copper, and it's a leverage play on copper exploration. The second part of the equation in the next 5 years is a given. They have been successful. They will continue to be successful. This is a really unexplored copper-rich environment, and this is a management team that has been exploring in the region for 15 years. Their exploration is becoming predictive. They understand the genesis of these deposits well enough that their exploration goes from success to success to success. They need now to develop a successful high-grade starter pit.
Okay, that's a good question to ask, Christian. Thank you. A few more questions. So, of course, we need to do the work and have a thesis and understand the company deeply. Otherwise, we will fail. But would you have less stocks but more closely followed, or a bit more stocks but less closely followed because we cannot pick the winners?
That depends on the person asking the question. How speculative is the person, and particularly how hard are they willing to work? 35 years ago, my portfolio was largely speculative because small companies that were less well known weren't well followed, and their market caps were substantially smaller relative to their net asset values than larger companies. And this resolved itself either with the stocks going up or the companies being taken over. I was willing to do the work when others weren't willing to do the work. And information was less readily available. There was no Cap IQ. There was no Bloomberg. You actually had to pull apart quarterly reports and resource statements and stuff. And I was willing to pull staples and do that. But a lot of people aren't. And the people who aren't willing to do the work need to be honest with themselves. They need to acknowledge that they have lives. They have kids, they have grandkids, they have gardens, they like to fish, whatever it is. And those people need to invest, not speculate. So it's really a function of who's asking the question more than anything else.
Yeah, indeed. In the age of or time of
yep.
Trump coins and whatever.
I too have become more investment oriented, and it isn't merely because I'm getting old and conservative. Many of the valuation disparities that existed 35 years ago don't exist anymore. With social media, with internet access, with Bloomberg, with Cap IQ, with the Northern Miners, there's broader distribution of information around junior stocks. So the extraordinary valuation disparities that existed 30 years ago don't exist anymore.
Yeah. Okay, thank you. And what would you, I think nothing is hated anymore, but what is less liked? Perhaps copper, nickel, or oil?
Certainly oil and gas. Oil and gas is getting a little love today as a consequence of the drama in Venezuela. Or if the oil markets aren't getting love, at least American oil companies who the market believes will benefit from Mr. Trump's action are getting a lot of love today. Trading the news is a fool's errand. You really need to look at the 5-year outlook for something. And the 5-year outlook for oil and gas is really, really, really sunny.
Yeah.
I'm not sure that the next year's outlook is really sunny. I suspect that we are deeper in a global recession than people think we are, which is why the oil quote is so soft. But I will note that $55 oil, as an example, doesn't work for most of the U.S. shale producers, which is why you're seeing U.S. shale production declining. It's also why you're seeing the industry defer between $1 billion and $2 billion a day in sustaining capital investments. This has an impact over 2 or 3 years, and people need to develop a 2 or 3 year time horizon. Following that, oil and gas, the high quality oil and gas companies are to me the biggest no-brainer in the resource investment landscape. And you don't need to go very far down the quality trail. I could suggest for people who aren't willing to do the work, buy Exxon and snooze.
Okay, thank you. And how important is the Lassonde curve for you to place a company on the Lassonde curve to
Well,
keep
it's
in mind where
interesting.
we are?
The Lassonde curve, first of all, it's real.
Yeah.
But the second thing is, in addition to being a fact, it's become a factoid, which is to say people's response to the market has been to exaggerate the Lassonde curve. Given the fact that I love hate, what I've begun to do is buy companies at the dead point of the Lassonde curve,
Yeah.
understanding that when the Lassonde curve, time takes care of the Lassonde curve.
Yeah.
And if companies in the worst part of the Lassonde curve are selling at 35% of net asset value, where that net asset value is increasing, what the Lassonde curve does is give me leverage. It gives me access to hate, even where there isn't hate in the market. If there's love in the gold market, but there's hate in the Lassonde curve, what I'm doing now is I'm buying the part of the Lassonde curve that's hated, waiting for the hate to resolve itself, and then banking my gains.
Yeah, you are more patient than 30 years ago, you mentioned earlier. Yeah.
You know, Peter, it's very odd. When I was a young man and I had lots of time left on Earth, I was pretty impatient. Now that I'm an old man with less time on Earth, I've become much more patient. And it isn't because my time preference has changed. It's because I've learned that that's what's required. You know, you have wonderful gratification about some trade that you make where you make X amount of money in 90 days. But nobody makes real money in 90 days. I've been lucky enough to make real money, and my ambition is to make more money, a lot more money. I think that we are in a profound bull market in gold and a profound bull market in raw materials. In my 70s, this is likely the last market of its kind that I participate in. And I'd like to participate very, very, very fully. And that will take time.
That's the only way. And I wish for everyone, also the viewers, if they make money, big money in 90 days, they should have the wisdom of not to mistaken this by being smart, and then because quite often this turns into, okay, I will make more and more bets and then I will lose, and I will buy a stock because I'm so smart, right? I will buy a stock continuously upwards, and then I keep it also when it goes down. So yeah, it needs some wise decisions. As Buffett also said, it's very simple but very difficult or hard to do. Yeah, and so of course you have now more knowledge and more experience. Do you see the how can I formulate this? So to me, it helps if I put myself in a situation, if I can put the current situation in the different phases, parts of the cycle. For example, I can now say that we had this bull market run last year, and in this first part of the cycle, the price went up to the fair value of the companies. The second phase will price in the future cash flows, and then the third phase will be the mania phase. Does this help you, or it doesn't really matter? It's just the fundamentals what is important? Because
yeah, for me it's just the fundamentals,
yeah.
because I'm not a sentiment trader particularly. I mean, I'm a sentiment trader in the sense that I recognize hate.
Mhm.
But
Okay.
in terms of trading market psychology, that's not what I do. Uh, to me, the market's not a subject. It's a facility for buying and selling fractional
Mhm,
ownership of
mhm.
businesses.
Okay, okay.
There are other people who are better able to understand popular culture, and for them, the market psychology is important because they're apt students at it.
Mhm, mhm.
Because I am not an apt student of it. I mean, I can't dress myself. I don't own a TV. Uh,
Mhm.
the idea that I would be a good analyst of popular culture is mistaken. So I don't do it. I'm not trying to say that it isn't a legitimate um, technique. It's just not a technique that works for me because I'm no good at it.
Mhm. But you recognize the hate, at least.
Yes.
That's where it
Yeah.
starts.
Social media has
Yeah,
been very useful to me.
yeah.
I remember looking at talks that I gave in 2000 and finding an amazing outpouring of hate for the uranium sector, a sector that I know well. Finding people who had been strong proponents of uranium 3 years before, so strong of proponents that they had uranium as part of their internet handle, now ruining the day where they ever bought uranium. There's nothing in the world I like as much in a speculative sector as hate. And hate was really on evidence. And even for a Luddite like me, even somebody disconnected from popular culture, when the internet comments are 20 to 1 opposed, uh,
Mhm.
and the one is apologetic, that's just a raging bull signal.
Hmm. Okay, great, great. Okay, thank you. I think our time is limited, so I have one more question, just slightly related. But yeah, thank you for all your wisdom, and I think we should re-watch this video because, well, it's a lot of information if we go deep. But so now that one viewer asked before we went online that now the sheriff entered Venezuela, and does Rick see geopolitical risks coming from deglobalization or countries turning inwards? And how could that affect investors in the long run?
I see a high
What do you
degree
think?
of political risk. Mr. Trump has a lot of justification
Yeah.
for interfering in the affairs of another country. If it was really about drugs, I would suggest that Mr. Trump enforce drug laws in the United States. He doesn't need to go to Venezuela. He can go
Yeah.
6 blocks from the White House. I can show him where
Yeah.
if he wants.
Yeah. Yeah.
I don't expect a call from him. Um, I
True.
think that Maduro was a despicable human being, and I think his continuation in office is the business of the Venezuelan people. I think that Mr. Putin will look at this as public justification for doing whatever he would like to do in Ukraine, or perhaps Lithuania, Estonia, Latvia, Georgia. I think Mr. Xi will look at this as a roadmap for his aspirations in Taiwan.
Hmm.
I think the idea that countries believe that they have uh, legitimate reasons to impose their preference on other people is very dangerous. Make no mistake, I'm delighted that Maduro has been shown the door. I will note that there has been no regime change. His government is still in place federally, provincially, and locally. So regime change hasn't taken place. People who think that the game has changed in Venezuela completely need to understand that Maduro has a lot of supporters at the state and local level, and his sycophants are still in control federally. So the situation there hasn't changed as much as the major news media would have you believe, for better or for worse.
Okay, yeah, and I think in this particular case, there is always some truth behind the curtains we don't know yet. Maybe our children will know, but I see in the near future everybody will learn what is tantalum.
Right.
Yeah, right. So, okay, thank you very much. Would you like to add anything else?
I would.
Classroom?
I have graded now tens of thousands of
Mhm.
portfolio over 35 years, and I would suggest helped in some small way tens of thousands of speculators. I would encourage your listeners who like what I have to say to personalize it. Go to rankings at ruleinvestmentmedia.com. List your natural resource stocks, and I personally will rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues where I think my comments might have value. Once again, ruleinvestmentmedia.com. Once again, no crypto, no tech stocks, no pot stocks, natural resources only. In terms of investing in yourself, by all means, check out the Rule Classroom. Over 200 hours of instructional programming, all free. Sign up for the Rule Resource newsletter once a month, all free. And if you like what you see there, come to our boot camps. $99 money back guarantee. And the granddaddy of all of our products, the Rural Natural Resources Investment Symposium, July 6th through 11 in Boca Raton, Florida, or via live stream from the comfort and convenience of your own home. Once again, gold-plated money back guarantee. If you don't think we gave you your money's worth, you can get your money back. I'm delighted to say in over 30 years of selling investor education products, I've had to refund less than 0.1% of the tuitions I've charged. But that money back guarantee is your guarantee that we work hard on our product offerings.
Yeah, yeah. Thank you. I agree. Uh, Thank you very much for being here. I am looking forward to meeting you in Boca Raton this summer. And thank you very much.
Well, this conference will be better than the last conference, and the last
Yeah,
conference was pretty good. So,
yeah, yeah, yeah,
right.
and especially yeah, because we also discussed this last year that who are the future people who serial successful managers, and yeah, I am looking forward to learn about that. So
Well,
I have
I
some
won't let
guesses,
you
but
in. I won't let you in my secret, but I'll set you up for my secret.
okay.
We are going to introduce you, we think, to what we believe is the highest probability
Mm,
future team on the planet.
yeah, okay, that's wow, good.
The single highest probability future team on the planet.
Okay, great. Okay, thank you.
Great. Thank you.
Thank you. Goodbye.
Bye bye.